Howdy, Jacob here. Today we're looking at New Oriental Education and Technology in the diversified consumer services industry. 10 billion market cap, almost half enterprise value. They provide private educational services under New Oriental brand in the People's Republic of China. So it is a China-based company headquartered in Beijing, and revenue growth looks amazing. Profits look amazing. On the growth side, 50% operating margin looks okay, down from 10 years ago. So not as much hitting the bottom line as the top line. I don't like that as much, and that's led to a reduced return on invested capital. But still, yeah, a lot, pretty much split between cost of goods sold and sales, general, and admin for their expenses. And then for the balance sheet, they have 1.4 billion cash on hand with 3.4 billion in short-term investments, 525 in long-term investments, no short-term debt, 14 million long-term debt, a little bit of capital leases. So if everything's the case here, this could be a decent buy, possibly. Huge increase in cash from operations, also increase of capex, but it's not as much as cash from operations from a dollar standpoint, so much more free cash flow. And we can't really see all that they're doing with their investments, but we see a little bit of share repurchases, a little bit of reinvestment. It looks like reinvestment is going to be the heaviest amount of their capital allocation. So for me, I mean, if these numbers are accurate and it's saying it's a decent price, could be. But again, you have to take everything with a grain of salt when it comes to markets that you're not necessarily an expert in. And I definitely would say I'm not an expert in the Chinese market. I thought that there was a ban on private like education, almost like I think I remember looking at like the Chegg of China or something, and it was privatized, and they didn't really like it and such. So, I mean, a lot can change, especially in this type of business, and we do see the last couple of years a big change in their margins, return on invested capital. So, I mean, for me, I'd be hesitant. I definitely want some extra margin here, but they'd probably be able to grow 6%. I think I mean, let's go market average here on the PE side. I definitely want a bigger return here. I love that free cash flow is greater, but I'm going to be a bit hesitant here, maybe 8 and 10 with share change of 1% is about 100 million. I mean, let's just say they offset stock-based compensation here. So, I mean, I could be just being very conservative. I think that that's a huge likelihood, but I do recall a private education company in China that had a lot of trouble post-COVID because they made some new demands, new laws and stuff. So if you understand this business, you understand this market a lot better than I do, you're going to do a whole lot better in investing in this business than I will. For me, I'm just going to be very conservative because I don't know anything about it. And I want to be extraordinarily conservative when I don't know as much. And the more confident I am in the figures, the less margin I need. For me right here, I need a lot of margin. I just don't see it at this point. Hope you enjoy the video.